Good morning. It is Monday, February 24th, and we are going to start our prep today for the ES. We are going to dive into our positioning today and then look ahead at this week and look at some of the key points and data factors we have coming in and where our insurance will play and how that will affect today's price action. Before we begin, we always want to start with our reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So from our systematics today and in terms of our flows and following the money, we are looking for really non-participation from 59.84 to 6,074, uh, oscillating between a $500 million bid and a $250 million sell. Not really much when on Thursday and Friday we saw $6 and $7 billion in the market from these groups. Um, so it's not as impactful today. It actually gives the market a little more freedom. To the downside, we start getting into our area where market makers will be fully able to allocate capital. If we get back down to 59.85, 59.61, and into this area, which is our lower target for today, as well as nearing our pivots, lower pivots on the weekly. So if you want to look at those, check out our weekly COT video. Um, on the upside, our line in the sand, our key point is at 6104. And if you noticed on Thursday how we held it, and then Friday, once we broke, we had a very clean move down with much wider ranges, stronger move, and increased volume and volatility. So those are things we pay attention to when we break our line in the sand, as it tells us we can look for more shorts in the market. And we had a 30% increase in volume on Friday, as well as a 17% increase in our volatility metrics. So these two factors don't signal a strong return in the market in the next day or two. So what that tells us is with systematics as non-participants, we can look for staying inside of Friday's range, which is very large, but really staying under our line in the sand, and we'll watch our pivot at 60-70, but more in this rotational zone and with a little bit more of a downside bias. And if we think of what's happening in terms of our structure for market makers, we have a $3 billion and up to $5 and $6 billion offers sitting in the market at 60.86, 60.64, which is where we can't get over in Globex. And then we'll see what happens if we can get down to 60.28. Again, that is where we came down to the prior week as well towards our lows. So this is a big area. When we came down on CPI, that was a bid before. Now that has turned into an offer. So if we come down there again on CPI day, on the data release, we mentioned why that would be the long. And now today, if we come down there, we're actually looking more for a short and a break of that. So these are changes that happen over time in the positioning that we want to pay attention to, as those flows directly affect our price action and our trades as day traders. If we think ahead of this week, we have NVIDIA earnings as key on Wednesday and PCE on Friday. So NVIDIA earnings are after the bell, which tell us to watch for that insurance play during the day on Wednesday and more likely in the second half as traders wait until later on to purchase their insurance. They wait until the last minute, until the storm's almost upon us. On Friday, PCE is in the morning, so we will actually look for that insurance play to come into effect on Thursday afternoon for everybody to get positioned, because Friday this comes pre-market, so they can't transact and buy as much insurance as they normally would. So that leaves Monday and Tuesday as the easiest days to see the market have any kind of upside move. Those are going to be the more likely days, because then on Wednesday and Thursday, we have reasons to watch, and we'll confirm by watching our indicators, but watching for that downward price action, that downward pressure for that insurance purchasing to come in. So we have Monday and Tuesday that are a little more clear, and we can watch for those moves to continue to the upside. So that tells us today we really want to watch our lower rotational zone here at 60.40 and then up to that line in the sand at 61.04 with, again, our major pivot at 60.77. And we will watch as these change throughout the day as we could get some more clear signals. If we do make a move lower, that 59.88 is where we expect market makers to really start deploying some capital. And if we get over our pivot at this 60.77, then the next level up is that 60.86 to watch for that offer to come in. So have a great day, everybody. Stay safe trading out there, and we'll be back again tomorrow to follow up with our next pre-market prep.